The REB Business Empowerment Showcase, shining a spotlight on the most innovative businesses that are helping principals, agents and property managers get ahead in their marketplace.
Well, good day everyone, it's Liam Garman here, editor of Real Estate Business, back today with another episode of the Real Estate Business podcast. And, you know, we often talk about the financial clouds on the horizon. Now, I'm not going to sit here and talk about what you've heard me talk about 1,000 times, capital gains tax, negative gearing, the changing property market. We won't be getting too much into that. But one thing we will dip into a little bit is that the economy is changing, the world of real estate is changing, and in particular, we're getting into a bit of a two-track real estate market. Some areas, I know where I live, it seems that every day new signboards are coming up and it's listings galore. I know a lot of agents, in particular where I am at the moment, the challenge is actually selling for the price that the vendor wants at a discount. A lot of vendors who are coming to the market at the moment are doing so out of necessity. And it's not too hard to get the pipeline. It's not too hard to get the listings. It's getting the listings out the door. But that is not the case for everywhere. There are a lot of places right across Australia where listings are tightening up. Sellers are waiting to weather the market, to weather the storm, to get higher prices later on in the future. So what does this mean? It means that in the world of the agency, there's a lot of change, and people need to be, agents, principals, licensees need to be more aware than ever about how they're planning their profit going into the future. And to join me today to discuss this, it's someone way smarter than I am, Wayne Johnson, founder and managing director at Agent Profit Planner. Mate, welcome to the podcast.
Thank you, Liam. Yeah, looking forward to having a chat.
And you and I, we did make this joke, and I'm going to say it. I'm going to say, for everyone joining us on YouTube, explain the face.
Can you see? Yeah, sunspots.
It was so close. It was so close to being skin coloured as well.
That's right. Take notice of what they say, otherwise you get stitches in your head. Simple as that.
That is true. Yeah. I think a lot of our Queensland listeners would be only too aware of that. But Wayne, talk us through Agent Profit Planner. It seems like an incredibly important time for agents to be taking ownership of their financial future.
Yeah, indeed. And what you've just said about changing market conditions gives us all the more reason to be putting a focus on that. I've been through a number of cycles now, and, you know, we've just been through an incredibly buoyant period where, it's the prices are going up. It's not an easy task, but it's a lot easier than what it is when it's going down. And the point is, a lot of decisions are made when the market's buoyant that haven't been well thought out, and those decisions come back to bite you when the market tightens up. And that's pretty well what we're talking about today, and the purpose behind Agent Profit Planner, which is our software program that enables you to do some scenario analysis, identify where some of the problems might be in your cost structures, and experiment with making some adjustments so that you can optimise your profit outcome.
And that scenario analysis, I think, at the moment is really important. And I have spoken to a lot of agents in quite, like I said before, economically buoyant areas of Australia where actually listings are tightening up because sellers are just happy to ride the wave. But those who are coming to market, the buyers just don't have it, whether it's the serviceability, whether it's the appetite to really meet vendor expectations, which means that in terms of analysing what the future means, you do need to plan for different outcomes, different scenarios. We can't just assume everything's going to be reggy-dig like it's been in the past. Wayne, take us through, how does the software work? Give us a little bit of a tangible insight into what you can do with it.
Right, and again, you've just pointed at something really important, and that is when our days on market go out, then we start to have some cash flow problems. We've got some fixed costs that we need to cover. The income isn't coming in as fast as it should. So there's a lot of moving parts, particularly on the real estate sales business. Most of the costs are involved with what we pay salespeople, and that's where a lot of the bad decisions are made. Also, when the market's pretty buoyant, we might get a little bit careless on advertising overruns, and we might also not look carefully at the costs of sales assistants, those people that are employed to help our salespeople, get the listings and sales quicker and doing all the legwork. And so a lot of those decisions are made because the market's buoyant, because there's a lot of money around, everybody's having a good time, and they're focused on listing sales. However, when there's a tightening up, those bad decisions really come to the fore. And I'll probably go back and I know we had a bit of a discussion earlier and we're sort of going to tail off with my experience, but I had 3 agencies running at the one time and obviously having been through a number of those periods of ups and downs, there's always a point in time in business where your mind suddenly gets to the numbers. When things are going well, it's about the revenue. More listings are going to fix it. But that's not the case. You've actually got to have a really good understanding of the numbers. I didn't initially. I had 3 offices over 150 kilometres and 2 property management portfolios in those 3 and 3 sales. Not a huge amount of sales staff, but as I mentioned before, something happens in your life. I happened to get married at the time and you start to think, oh, now there's extra responsibilities and I'm not going to have the time as a business owner to be putting my legs in the field as I had been doing. So I went to the accountant and anyway, I looked at the figures and with some real questions in my mind. And first thing I found was he'd lumped all of the revenues and expenses for each of those 5 profit centres into the one P&L.
So you can't work out what's working, what's not working.
No idea. And I'm starting to ask myself some serious questions now. And what I did was my new wife and I, what a great way to introduce your new wife to your your world, as we stripped out all those revenues and incomes for the 5 profit centres for the previous 2 years, suddenly had clarity. And it's amazing how that makes you feel. When you're clear, you can see, then you really feel confident about what decisions need to be made. And that's really the purpose of Agent Profit Planner. My accountant couldn't give me much in the way of assistance to build a more profitable business. He was very good at doing my tax returns and compliance matters, but he really wasn't interested. And again, because there's a lot of moving parts, and accountants, I mean, they're numbers people, but to build a bespoke solution takes a bit of time and effort, especially in a fee-for-service business. And so that was the start of my journey with a tool. I wanted a tool that enabled me to clarify the current situation, but what if I did this? What if I did that? What would the outcome be? And work your way towards a scenario that you thought was desirable and achievable. And that then becomes your template for the next 12 months and the basis for all your decision making as well.
So, I mean, with a lot of this, it was born out of, and I suppose the origin of Agent Profit Planner is a lot of what you wish you had, and what would have supported you on that journey. And it's so funny to think now that you're at a point now where you trusted someone who was an expert and they all just kind of mix it all together in the one pie. And you just, I've got no idea. For all you know, you've got a profit center which is remarkably unprofitable, right? And should have been either had serious scrutiny over it or potentially just wrapped up, full stop, if it was.
Well, that's a very good point, indeed. And look, just going back a tick, Xero did a survey in 2023 in Australia and New Zealand, and the number of small business owners that admitted that they really didn't know their numbers, to the extent that it caused them anxiety and sleepless nights. It's a common thing, and I think it was over 50%. But getting back to those numbers and the way your financials are structured, it's incredibly important to understand some of the key metrics in both the sales and property management. And it's true to say that a lot of agency principals, and I was the same, we had a very sales-focused context on the business. Property management was a bit of a regular income. But what we didn't know is some decisions that are born around what we call the gross profit margin. And getting back to that last statement you made about the structure of the finances, the accountants use very much a retail sort of model when they're structuring their P&Ls. And there's a critical metric called the gross profit margin, which is quite simply revenue minus costs of sale equals the gross profit margin. Now, what are the costs of sale? Is there any cost directly related with getting a listing or a sale? And so that's what we we pay our salespeople and their superannuation, the sales assistants and their super. There's the cost of advertising if we're not getting it all from the sellers. There's other costs per transactions that we might have as well. Now, if your financial statements aren't set up to reflect that, you're not going to be able to get an accurate read on that gross profit margin. And why is that so important? The gross profit margin is important because it's an indicator of how well your business can take increases in fixed costs. So if you're at a 50% gross profit margin, which would be pretty hard to achieve in a real estate sales business, and you wanted to rent another flash premise, it's going to cost you an extra $50,000. With a gross profit margin of 50%, you're going to have to generate an extra $100,000. If you're on 20%, it's 4 times that amount. The question you would have to ask yourself, if I have the same sales team and the same market conditions, how am I going to generate an extra $250,000 to cover that $50,000 rent increase? And that's a critical measure.
So take us through, how does the platform work tangibly?
So what we do, we've structured the program. Agent Profit Planner caters for both sales business and property management business. So we separate the two naturally. The first thing we do is we input data, which we take from the P&L. And actually, we get many of our users saying, well, can we do a direct upload from our accounting program? Yes, we can, but because your P&Ls are structured so badly and in so many variations, you're going to have a lot of polluted data. Within our program, if we look at the sales business analysis tool, we separate the cost of the sales agents, affiliation fees, and other costs of sales, because they're generally a percentage. They're variable, they're percentage of GCI. So naturally, we separate those out, and the fixed costs are separated as well. So those variable costs, the reason we separate those out and plug them into the program in their individual areas is that the program has the ability to reverse engineer. So I might say, how much GCI do I have to generate to make a $500,000 profit? And it will calculate the increase in those expenses based on their percentage of GCI automatically. So, getting back to the data entry side of things, the other reason we say the upload is not a good idea is that the amount of information that we find our users, principals, discover by manually going through that P&L with their bookkeeper is extraordinary. There's subscriptions they haven't used for 3 or 4 or 5 years, and, oh, gee, am I paying that much for that? What's that? Because they really in-depth forensically look at that P&L. They're more looking at how much is in the bank. Can I pay the bills? And when can I give myself a dividend? But we need to get back to forensically looking at it. So getting back to the program, we structure it up so that all that data is separated and it enables us to generate a clear picture. So once we've got our initial scenario created, we can copy that as many times as you want. So, what if I added 2 salespeople, for example, or on property management? What if I twigged that monthly administration fee and up that? And what if I twigged a few other fees? What if I wanted to purchase 200 managements 6 months in? What is that based on what I'm going to pay and that the fees coming from that portfolio? Is that going to be a worthwhile exercise? So these are all the experiments that you can conduct with the program. So what if analysis? What if analysis?
I'd love to get some insights into what you're seeing on the ground at the moment, because there seems to be a high level of financial stress and uncertainty in the real estate market at the moment, in particular from the licensees, the principals, the directors. What are you seeing on the ground at the moment, and why are these small business owners having a bit of a harder time?
Well, there are a lot of pressures on costs for a start. And in terms of recruiting a sales team, it's also very difficult for smaller operations to recruit new people. There's a high risk in that. First of all, have you recruited well? And again, most agency principals aren't recruiters and they're extremely busy. It's a difficult job. There's so many things to keep your eye on, let alone if you're a listing and selling principal, which many are, with compliance and the more and more compliance getting lodged on us. So how can you be a good recruiter? And then if you haven't got a massive agency, what resources are there to train and nurture that new person, even if they have got the right characteristic? So what typically happens is they get to, 6, 7, 8, 9 months and it's all too hard and off they go. That's a cost, a measurable cost. And the other thing that then option that an agency owner has is going to poach someone else. Now, that's got prickles on it too. We've got a book about recruitment that talks about why people might move from one agency to another, and it's generally about how much they're going to be paid. So it's easy for me to say, great, I can get them. I'll give them 70% plus super. Not thought out. When you do the numbers on paper, that's a really bad decision unless they're exceptional writers. And then we have other things to consider too, like what sort of culture does that high seller bring in? Because often they're pretty ruthless and, they destroy your team at the photocopy machine and make all sorts of demands of your staff. So there's that cost as well. Some other challenges that we're facing on the property management front. Of course, we all know that technology is coming in and people are trying all sorts of, we had outsourcing as the key cost reducer. Now we've got AI solutions and all those sorts of things. I don't know where it's going to end, but I certainly know that there are, as we know, there are businesses out there that are trying to create these property management platforms on tech only at low fee. And of course, that's going to put a lot of pressure on traditional property management setups. So again, there's a need to be very mindful of the numbers and how efficient the resource use is.
Real estate agency owners, they're in the midst of sales, leadership, compliance, sometimes playing a leadership role across all of them. Where does financial decision making stay, and where does it call home in that mix? Who makes the decisions, or when are they made? Or I might have asked. It might be a shit question. Real estate agency owners often juggle sales, leadership, and compliance. Where does decision making typically break down that mix? I can kind of fucking done that right. You said many agents. Okay. Actually, we're going to move on. Good. That was a dumb question.
Right.
Now that I'm reading it back. One consideration is, and you highlighted this before, Wayne, in particular with the change in listing times that might need to be a requirement for money in the bank longer, especially as days on market increase. There is a focus on short-term cash in the bank. I think that's just a primary consideration that a lot of agency owners have. Why is this approach limiting for long-term profitability?
Yeah. And again, we're moving into a different market cycle now, and there will be periods of time where you're going to have expenses that drag on and income limited. So it's important that you do monitor your cash flow. You have a cash flow forecast that is robust. And of course, our program will develop that for you. Some of the costs that you have are lumpy too, and you might not remember that come November, that is when all your insurances come in, for example, and these days they're sort of on the up with cyber, et cetera. It could be a bill of $12,000 or $14,000. So where is that going to come from? So it's very easy to get caught in that trap of just what's in the bank to pay the bills next month, whereas you should be a lot more proactive than that. And one of the areas I find that causes quite a bit of trouble is when long service leave arises. There should be provision accounts as one of your assets, provision for long service leave. If you've got 2 or 3 people going into long service leave, it's not insurmountable, but it can be quite a lot of money. And there are other risks as well that come with not focusing on ensuring that you've got a buffer, a cash buffer in the system, and also, as I said, producing a robust cash flow forecast for the 12 months ahead, rather than what's in the bank for next month's bills.
What do you think on the back of that, what do you think some of the most common financial blind spots are in small to medium-sized agencies?
Well, again, if I look at property management, let's start there. It's often, I find that agency owners, and I was one of those, we didn't really have an eyeball on the intricacies of the operation of PM. We're happy to take the check at the end of the month, but rarely did we go in and have a look at what the challenges that our team were facing. Are they resourced well enough? Are they the right people? Are they efficient enough? What does my portfolio really look like? I've seen portfolios in metropolitan areas where they could be spread across 30 sets of traffic lights from one side to the other. Why would you have a management like that? We have a stat in the system called cost per management. And, of course, that's a product of cost spread across the board. But you can get an incredibly frustrated property management team when they're having to service those listings that are so spread geographically. And they could also be very poor products as well, all requiring a lot of repair and maintenance, and all these things frustrate. So how often does an agency principal actually get into their property management business and examine, what does my portfolio look like? What's its profile? Have I got the right team? Are they working too hard? Are they not working hard enough? What other ways can I cut cost? Where does technology come in? And I don't blame them when the word technology comes in, because you've only got to look on the socials, and the amount of tech that's coming through now offering solutions for property management is mind-blowing. As you know, and you're running the award events, and every year someone's coming up with an idea.
Yeah, there's no shortage.
So if an agency owner, talking about a blind spot, they look to these solutions, and it's just like a spotlight in their eyes, and they go, "Nah, that's too hard. I'll go back to my safety zone. List sell, until another storm arises in their PM department."
You would have seen probably a fair few examples of those, but you would have seen some pretty good businesses and some less good performers. Do you think that there's an absence of financial literacy among former salespeople turned business owners, and how can they reduce this knowledge gap?
That is probably the number one issue. Most of us, as I was back at that time, pretty good at relationships and negotiation and all that sort of stuff, but very limited knowledge on the numbers. And this is typical. And I think I had that business for 12 years, just under 12 years. I had a couple of partners at one stage. And I then went into working with a franchise group, global franchise group, and in charge of overseeing business support. And I saw exactly the same thing in all those agencies. And since then, obviously, having built Agent Profit Planner and working with hundreds of agents, they're all sort of facing the same problem. We're very good at our craft, but we're not so good on the numbers, and we don't find it interesting. It's right brain versus left brain.
Yeah.
So it's just a case of agency owners taking the time to sit down with their bookkeeper and have some simple guidelines as to what they need to look for without overwhelming it. And we have a workshop that focuses on exactly that. That's like finance for dummies in real estate agency practice. They're not dummy. I mean, I was one. I'm not calling them dummies, but we keep it very simple, and at least the owner can walk away then with just some sort of clarity, enabling them to get a little bit excited about revising those or reviewing those numbers every month, when it might have been every 6 months prior to that.
What's the best way of reviewing? Like, what's the optimal review?
Well, first of all, I would take a lot of time out to sit down and plan the year ahead. Now, that might require a little bit of time away, maybe a day or two, certainly with your bookkeeper and or your accountant. You need some guidelines as to what you're looking for and why you're doing this. And then once you've got that set up and you're confident that the plan that you have set out for the next 12 months is robust and achievable, then you should be looking at that at least every month. That forecast will provide you with all the financial and productivity KPIs for you to monitor over the year ahead. You should look at those every month. And if they're different to what you set out to do, why is it? And do we need to make amendments?
You mentioned before that you had 5 profit centers all kind of coalescing into one. What were some of the key findings when you first pulled that apart? I can only imagine that there were things that shocked you, both good and bad. I'm going to guess you're not the only person listening to this podcast that has had that before. You already highlighted that 50% of small business owners, it keeps them up at night almost because they just simply don't have that clarity. What were some of the good, bad things that you found once you split them out and you got that clarity?
Yeah, that was very easy. I immediately decided to sell the 2 non-core businesses.
Yeah. So
straight away.
What we highlighted before, which was getting rid of some of them might actually be the smartest thing to do. Okay.
Yeah.
Yep.
They weren't losing money.
Yeah.
But I wasn't being compensated anywhere near the amount I had to for time, and it just wasn't worth it. And I couldn't see it getting any better. I'll come back to compensation in a minute because it's an important factor that you've just brought up. Interestingly, both the salespeople in those businesses bought the businesses straight away, and one of them increased his GCI, and he was the principal selling person in that team either. It was only a small team, by 50% in the next financial year with no change in market conditions.
Yep.
So it just showed what skin in the game did.
100%.
And I remind him about it too because I still see him from time to time.
Yep.
And the other thing I wanted to say is I've forgotten now.
I'm sure
there are
pluses. Like you would have found areas which overperformed relative to what you assumed they were doing.
Yes. Well, I was able to see where the most opportunity was, where I should focus. And that was the property management portfolio in my primary office at the time.
Yeah.
And I also decided that I wouldn't take listings. This was a semi-regional area, and so we would typically take some listings, quite far away. We decided to wipe that out as well.
Right.
It just wasn't worth the time.
Yep.
And I know what I was going to get back to, a thing called compensation. Yeah. This is, to me, this is the crux of the reason behind the Agent Profit Planner program and any thought about improving your level of profitability in your agency business. And that is, are you being compensated enough as a business owner for your input to the business? So we look at 3 areas. Number 1, if you are producing, active in the business, producing fees, either as a salesperson or in PM, typically at sales, you should at least get a return as much as your salesperson. Let's say 50%. So in the program, we can treat you as a salesperson. Secondly, you'll be spending time managing the business as well, and all the stuff that goes with it, compliance, et cetera, and solving people problems. So how much of that time are you spending of your time away from listing and selling? Let's say it's 30%. So what's an adequate compensation for that 30% of your management fee? Is it 80,000 we factor in? Is it 100? And the third level of compensation is you're a business owner, you're running a business, you're entitled to a reward for the risk that you take, which is called net profit. So there's the 3 compensations. If you're producing, a reward for your personal production, as you would pay a salesperson or a PM. Secondly, management fee, time spent managing the business. And third, margin of net profit. So this is the opportunity cost of your time.
What's on the horizon for you at Agent Profit Planner? What are you planning on expanding into, doing over the next 12 months?
Well, we've just introduced our new sales agents planning tool.
Nice.
And again, it's all about clarity preceding success.
Yep.
And so this is a neat little program for sales agents, salespeople, to plan their year ahead. There's 2 components of it. The first is that they can focus on their work only, their real estate work only. So we input how they're rewarded, their commission structure, et cetera, anticipated work-related expenses. And then they've got 2 choices. They can say, I would like to generate a $100,000 after tax cash flow for the next year, and it will calculate how much GCI. Alternatively, they can say, I expect to write 250, 300, 500,000 GCI. What after-tax return will that give me? And it will also produce all of their productivity KPIs as well. How many sales, how many listings, how many listing opportunities, and the prospecting volume. Stage 2 is they can incorporate all of their personal finances as well. So their day-to-day living, their surplus and shortfall on investments, and come up with a complete comprehensive personal plan based on their real estate work life.
I'm guessing that this would also have some pretty big benefits for EBU planning as well, especially when you do have some of these super high-performing agents out there that do have assistant agents and the business unit around them and supporting them.
Correct, exactly right. We had a case in Queensland. I did a workshop up there, a CPD workshop for REIQ, and there are a number of EBU team leaders in that session, and one in particular. We had a great discussion after, and she had some major structural problems, and we were able to identify where they were and put some different parameters in place, and that would enable this particular EBU operator to return a lot more than what they were returning for their effort. It was just some bad structuring, some slight changes, and but the EBUs are obviously a growing aspect of how businesses run. Particularly, there's quite a few in the Queensland area, but they're sort of running down the eastern seaboard as well, and I think they will probably become more and more popular.
Absolutely, couldn't agree more. Especially as people are a little bit more conscious about the money that they're bringing in and the money that's going out. But
correct,
Wayne, I think that's all we have time for today. Thank you so much for joining me on the podcast.
Been a pleasure, mate. Lovely. Thanks for the opportunity.
Now, before I say farewell, if anyone wants to get in touch, what's the best way they can get in touch with yourself or the team?
Just go to agentprofitplanner.com and just hit the contact button, and there's an email address there that'll get to me pretty quickly.
Fantastic. So for anyone listening, if you do want to reach out to the team at Agent Profit Planner, make sure you're jumping on their website and giving them a message. But that is all we have time for today on the REB podcast. And until next time, bye-bye.